Good morning, Wall Street winners. It is Wednesday, July the 10th, and we are in for an interesting turn of events today. I want to start off the day with an article on Bloomberg about oil eases drop as China concerns vie with U.S. inventory data. So the API, which is the American Petroleum Institute, reported that crude inventories shrank by almost 2 million barrels. Which is a significant drop. And the Chinese data out of China is showing deflationary pressure in the world's largest buyer. So oil erased an earlier drop after a run of losses as concerns about Chinese demand and continued uncertainty over the timeline for interest rate cuts by the Federal Reserve vied with signs of another inventory drawdown in the US. So although we've seen oil get beaten up a little bit over the past few, call it the past week, past few days, I do think we're going to see crude go positive today. We can see if we look at the futures market right now, and it's about an hour, 50 minutes from the open today, all three of the major US indices are in the green. The NASDAQ by the most, both in percentage and number. But the Dow and S&P following behind that, which means that your traditional sectors as well as tech sectors all look set for a positive start to the day. Doesn't mean we'll end there, but it looks like we're off to a positive start. If we scroll through our list here of health and retail, again, I'm staying out of health and retail for short-term, short-duration trades right now. There's just not enough activity and volatility in this sector, and that should change as we start to get into past this Friday when we start to get the first set of earnings for the quarter out. But those earnings are going to be tied to financials, so that's really where my focus is. I did pick up some JB Hunt yesterday, as I talked about in yesterday's video and a few days ago. JB Hunt has dropped below the 156 level and became extremely attractive in my mind. If we look at the 1 month chart, it's now down near its lowest 1 month levels. And that tells me that if I am willing to wait, call it 15 to 30 days, maybe less, it should pop back up into the high 150s, if not the low 160s, as it comes out of this cyclical rut. Now that said, if you look at the longer 6 month chart, maybe we're just starting to see continued declines. We do have earnings coming out in 6 days. And obviously, if earnings show any kind of positive signs of a turnaround, then that is going to help significantly with a bit of an uptick. I'm not relying on that, but more looking at the trading envelope. Now, obviously, if we get bad earnings, that is going to cause this stock to go down even further. And if we go out to the 1 year, we can see that we're already at the lowest levels over a year. And in the 5 year, we are a little lofty. So this stock could fall down into the maybe 120, 130 levels if we do get some less than excellent earnings, or earnings miss estimates significantly, or forward guidance is poor. But I don't believe that to be the case with the economy where it is right now. Transport is a huge part of keeping the US economy rolling, and JB Hunt plays a large role in that. If we look at our oil stocks, oil has taken a bit of a beating recently, but most of our stocks are in the green pre-market. Oil was down. It started to recover as we move towards the open. I expect oil will get back above $82 a barrel today for August 24th futures that we're looking at here. And if we can see oil tick up, I think we're going to see oil stocks lifted. I think Valero is buy. It's a steal right now at 146. I think this is a $185 stock by the end of the year. A potentially $40 gain on that would be a huge percentage gain. And I am a believer in that happening. And then we've got some movement in some of the others. that I am less interested in, but that have some potential. The other one to keep an eye on here is Con Ed. Now, not an oil stock, but a utility. And Con Ed yesterday dropped down to the mid 88 range and as low as 88.31 really yesterday. And it's been bouncing down at that level and then recovering up a little. If we look at the 1 month, it too has dropped significantly from, we'll go to the 6 month. It was up as high as 98 at one point. It's now down close to the 86 level. I'm waiting for this to pull back just a little bit more. If this pulls back into the 87 range, I would definitely, or 86, I would definitely be picking up some Con Ed and waiting for that to recover to $90. That may take a month or so, but it would be a nice little percentage gain and significant pop. And that seems to be the trend in that stock. Moving down to tech. So tech has just been on a tear. And if you've been invested in tech in the long term, you've probably done pretty well, although some tech stocks have taken significant setbacks and hits. And at the same time, a lot of those that have been hit after an earnings report have either quickly recovered or have begun that recovery. So quickly recovered would be the camps of, say, Tesla, which is now up 2% on the year, and it was down significantly for the first half of the year. Meta, which took a huge hit, down I think $50 in that range after the last earnings, and back well above what it was at. It was in the 490s, mid 490s, low 490s before earnings, dropped down significantly, and now up in the 530s, 540s recently. So that is an example. Nat was up in the 110s. It's now at 83. Palo Alto was dropped down to the 270s. It's now in the almost 340s. It's the mid 330s. CRM was up in the 300s. It's at the 250s. So a lot of movement there. But if you've stuck to call it the Fab Five, Microsoft hitting an all-time high up in the 460s. ARM has been a rocket ship. I'm surprised that this stock is valued where it is. This is a $100 stock at best, in my opinion, but it has just grabbed that coattail of NVIDIA and rode up well above its valuation. I mean, if you look at the price to earnings on this thing, it is just mind-boggling at 628 times earnings. It's just not something that is sustainable, in my opinion. ON Semiconductor got hit with the slowdown in EV sales. And then as we move through the list, Workday has been beaten down, but it is coming back. Very strong company and strong stock. We've got Amazon near all-time highs for the last couple of years. Tesla, as I talked about, has been on a tear and seems to continue to be. It's had 9 straight days of wins. Meta was trading down from 540 yesterday at 530, but is looking like it's up $3 pre-market. A long shot stock here is Alibaba. So Alibaba has just started to make announcements this week and have news articles released around its AI integration to help its retailers. And if that messaging starts to grow and take seed in analysts' minds, I think we're going to see some positive movement through the rest of the year and into next year in Alibaba. So at $75, $76, I think Alibaba is a steal. That's a $125 stock, in my mind, by January or February of next year. So that's a pretty significant, almost doubling, in fact, of that stock by, call it, winter of 2025. Then we've got NVIDIA. NVIDIA took a bit of a hit, but it's starting to recover. It's up almost, it's $2.50 pre-market today. Google's been on a run. I do think we're going to see a pullback in that. We saw a pullback in Adobe yesterday, but I think it's going to make that up today and get back up into the $600 range by its earnings in the August timeframe. And then the financials. So financials are what everyone in the market is waiting for this week, and that is with the release of earnings coming Friday morning for a number of these, JP Morgan being one of them. The concerns here are about what their future outlook looks like around net interest income. So net interest income is the spread that these banks make on the money they take in from their clients and the money they give out for loans. And the challenge here is with interest rates the way they are, they're making a fairly good spread. But if interest rates get cut, that spread will reduce. And there's not a lot of people, not as many people taking out loans because of where interest rates are. Knowing that interest rates are coming down potentially with the Fed making announcements that it's possible that there will be a rate cut later this year, and Fed not saying that, but analysts predicting that based on messaging from the Fed. People are waiting to get a loan at a lower rate. So loan business has stalled a little bit or has dropped off in comparison to maybe what it was when interest rates were much lower at 1% a couple years ago. But at the same time, investment banking has come back. So the banks that are involved in investment banking, like JP Morgan, the larger ones, Morgan Stanley, Goldman, they're going to see an uptick in investment banking revenue. It's not going to be like the heyday it was 3 or 4 years ago, but it is starting to make a comeback. So where I think you've got more potential is not necessarily in, maybe in JP Morgan. I mean, it's a great company, but I think Goldman and Morgan Stanley are going to be the bigger gainers in this capacity. And then you've got some of the small regionals, and those are where I would be careful, because you've got the commercial real estate issue where that affects more of those regional banks than it does the large ones. And you just have a little bit more risk around those. They have less investment banking, if no, maybe no investment banking associated with them. So it's all based on net interest income. And if the number of loans are going down, then that is impacting revenue there. So that's where we are today. Good luck with your trades. And if you like these videos,